Cool. It's 1 o'clock. We are opening our webinar. Hi, I'm Matt from Crowdcube. Great to have you all with us today. I've just been informed that we've hit our 500 person maximum in terms of signups for this event, which is, I think, not testament to anything to do with Crowdcube, but very much testament to our guest today and the business currently raising on the platform, which is the wonderful Chip. I'm joined by Simon, CEO and founder of Chip, and Sharon, COO, and more from them in a second. But as I just said, Chip have been will work with us multiple times on multiple crowdfunding rounds. They just raised £10 million in 48 hours. They just executed the largest ever convertible crowdfunding campaign in history, and they've got a second tranche of their investment opportunity currently live on the platform. Fair to say, I need to just attach a risk warning in advance of the session today. Please do continue to invest aware, and please be aware that your capital is obviously at risk. This is a illiquid and riskier asset class than some you may be invested in. But enough of that. Let me hand over to some introductions from Simon and Sharon. And perhaps both, if you could talk, Simon, a little bit about your why you started the business, your reason for being. I think the audience would find that super interesting. And secondly, from you, Sharon, perhaps your why in terms of why you joined the team and what excites you about the plans that Chip have for the next few years. So Simon, over to you.
Absolutely. Thank you very much for that introduction, Matt. Very kind words about the business, about Chip. So as Matt said, I'm Simon. I'm the CEO and founder at Chip. 3.5 years ago now, I set out to build this company. I just sold my previous business. I was working in another company, and despite earning a relatively good income, having quite a bit of money put away, I was absolutely terrible at saving. And somehow always found myself in my overdraft at the end of each month. And the money that I did have put away just was earning absolutely nothing. I think in my nationwide current account, or separate current account. So it got me thinking at that time. It was sort of the birth of Monzo and Revolut, and there was a lot of activity in fintech. It got me thinking about this problem, and is there an opportunity to build something, build a challenger bank, a challenger platform for savings and for investments, something that actually helps people to save, identify how much money they can and they should be putting away each month, taking out of their day-to-day spending, but also just making it incredibly easy to earn the best returns on that money, to earn the best interest rate, and where possible, be able to invest that money sort of to meet their financial goals. That's how we started off. We're now, as I said, almost 4 years later, we have over 250,000 customers. We've enabled people to save over £170 million. We have raised, well, including this raise, about 23 million pounds to date. We're a company of about 70 people. And we are very much focused on that core mission of building the best savings account that we possibly can, and enabling people to build a wealthier tomorrow, build a better financial life for themselves. And that's what we're all about. Sharon, our fantastic COO, I'll let you answer your why.
Thank you, Simon. Good afternoon, everybody. Lovely to see so many of you on this call. Just a little bit about me. So I joined Chip about a year ago, just actually a year and a week ago. Had my Chip anniversary. I think in terms of why Chip, so I've spent 20 plus years of my career working in financial services, mainly in the big banks, Barclays, the types, GE Capital, and lastly more lease plan in the lending side. And so they're very successful corporate businesses. But I think for me, the world of fintech was way more exciting. But I think particularly what was interesting to me about Chip was the fact that it can be used by anybody. It can help anybody. It's very democratic in that way. And I think that was the real piece of interest for me. And as a business where it was at the time and where we want to take it to, I was like, wow, this is amazing. There's only one place I actually want to work. So that's why I joined Chip. But I think it's so exciting right now that I'm at the best decision in my life, really.
Sharon, and yeah, Chipiversary, I kind of like that. We haven't got anything similar to that at Crowdcube. We'll have to find something. What we're going to do for the audience is we've probably got about 7 or 8 topics of conversation, and after each of those topics of conversation, I'm going to pause for a second, and if there are questions from the audience, you know, Simon and Sharon can address those, and we'll try and break it down into manageable chunks so you get the opportunity to ask questions about the particular topic we're talking about at any given point in time. Let's get straight into the meat of things. A question for both of you really, but perhaps Simon, if you can lead. Can you talk to us a little bit about business performance pre-COVID? So kind of what trajectory you were on, you know, what were you saying to the board? What were the plans for 2020 and 2021? And then a little bit about what's changed to that post-COVID. You know, have things accelerated, have things slowed down, and has your outlook fundamentally changed as we look into the later second half of 2020 and further into 21?
Sure. So to answer that, just to be clear, so everyone's aware, the fundamental of the product is that it's open banking power. Chip connects to your income account, whoever you bank with, and our algorithms analyze your spending, analyze your income, and then every couple of days automatically sweeps an amount of money into Chip that you can afford to save. So fundamentally, the less that you're spending, the more that you're able to save, and the more Chip saves for you. So that just to be clear, that's the premise there. But the challenge for us, has always been, I think, convincing customers, convincing the public that saving and financial security and investments is something exciting, is something that is interesting, that you should be putting your focus on. That's always been the challenge, and kind of convincing customers that you can do it relatively easily with a product like Chip. And what we saw at the beginning of this year is, as the country went into lockdown and as the pandemic struck, frankly, people were spending less. And as a result, our algorithms picked up that excess money in people's income accounts, and the amount that people were saving, our deposits shot up. I think it was about 110% in the first part of the year. And I think we just saw an increased realization from our existing customers that, wow, you know, it really is possible to make a difference on the savings investment side, and put away a decent amount of money and do something positive with that. And for new customers kind of looking at Chip or looking at products like Chip, we just saw a much bigger awareness, or an increased awareness of financial security, safety net, people just thinking about, you know, what's going to happen to my income, what's going to happen to my financial position. And that in turn, we just saw a lot more traffic through the App Store, a lot more people searching for fintech products, for products like Chip. And as a result, because we were at the top of that market, we were able to pick up significant growth. So deposits up about 110%. Customers have pretty much doubled in the year to date. And we were, as far as our results or what we were planning, so we were planning by the end of 2020 to have hit 250,000 registered users. We got to that number some point through August, some sort of first week of August. We passed that threshold. So we've now adjusted that. We expect to hit in excess of 300,000 by the end of this year. And with the capital that we've now raised, with this additional second offer that we're now raising, and our plans for the year to come, we see it genuinely, you know, realistic that we can be at 750,000 registered users by the end of next year, and really kind of taking those steps of putting our product into the mass market.
Just jump on the product piece for a second, because we've had a couple of questions from the audience already, actually, about, yep. You talked, Simon, about acceptance of use of and awareness of financial technology products has kind of grown post March and you know, this post-COVID world.
Yeah.
Where do you see yourself in terms of your competitive set? There are other players in the market. How do you differentiate yourself? And you know, why are people using Chip in droves versus another product that could be out there available to them?
Sure, I think that there is a broad range of different offerings within the space, particularly within fintech, but also within more, I guess, traditional legacy financial service businesses. To give a really quick breakdown of the way I see it, that you have affluent people being served by independent financial advisors and wealth management services at top banks, investment banks, and so on. You then have platforms like Hargreaves, and then sort of a slightly sort of more fintech end. You've got obviously Nutmeg and Wealthify and so on that are serving people who already have accumulated wealth, already have accumulated money to save, money that's been saved and are looking to invest that. But when you come right down to what we call mass affluent, mass market affluent, people who are on relatively good incomes, they have excess income, they should be perhaps saving more than they are, they might have a workplace pension as well, they're not particularly well served at all. You basically have your bank, which is offering you now, you know, absolutely abysmal interest rates on savings, and you have banks obviously offering sort of quite limited investment fund products as well that tend to have particularly high fees and not very transparent as to what's going on there. And that area of the market is significantly underserved. There's ourselves. There's a company called Moneybox who also raised on Crowdcube a few months back. We're quite similar. I'd say the distinction for Chip is that we see savings as that foundation to engage our customers. 97% of the country have a savings account. Everybody wants to save. Everybody should be saving, right? And by offering the best possible savings proposition, we're able to engage a much larger audience, bring on a much larger customer base, and then perhaps take them on that journey towards investing. The other company I mentioned, I think, a little bit more focused on kind of rounding up transactions and micro investing, and that's kind of the distinction between us. So I would say this, but I think the market opportunity for Chip is much larger because we are going for that broad base and starting with savings.
Quick extension to that question to you, if I may. What do you think is some of the kind of secret sauce around what you do from a product perspective that does have people engaging with it at the level they currently are, you know, and feeling so compelled and in love with the product that you know, tens of thousands of them have become shareholders?
Yeah,
it must be something you're doing that's super interesting.
I think it's the automation, or we believe it's the automation. It's the fact that we don't. I think as a brand as well, we don't really have an ego. We don't require our customers to do very much. Just connect Chip to your bank and we'll do it for you. And the most common bit of feedback we have from customers is, I just started using it. I couldn't believe it. I've now saved £500, £1,000, you know, £1,500. I think we kind of take away those barriers that often other platforms put in front or make customers feel like are in front of them. It makes it feel perhaps a bit challenging, scary, complex to get involved. Chip, the entry level is really easy. Just connect your bank with open banking and we'll do it for you. Tell us what you're saving towards and we'll do it for you. And the most common bit of feedback we have from our savers is that's what they love about the product. And as you said, that's why now, I think with this latest round, we're now at 15,000 of our customers have invested in the company, and that's why.
Just to add to that as well, I think we've done an awful lot with our community. So we actively ask our customers through our forums, ask them which products they want, which features they want to see, and ask them to test it before it goes live, feedback on it before we put in beta tests. And that, I think, the use of that community group, which I think is about 12,000 users now, and is open to everyone, has meant that when we do introduce those features, they use them very rapidly. And we've tweaked them because of feedback. We've added additions to features such as our payday put away. You know, some people said, why don't you do weekly? We're not all paid monthly. And so we did that, we changed it. And I think it's important that we actively listen to the customer base, because otherwise that engagement will drop off.
Sharon, I remember you saying at the beginning when you joined us, when you were at Barclays, like the amount of money and resource that they spend on getting customer feedback and trying to surveying customers and understand it. And
insane.
You know, and the kind of the shock that we have a Facebook group of chipmunks, and you can put up 3 different screen designs, and you put it out to them, and with, you know, by 6 o'clock that night, you've got 300 different responses showing you which one they prefer.
He's out of business all over London with your the feedback loop that's generated from your investor community. I think is wonderful. Last bit on the product and your target audience. Like, what does Mr. or Mrs. Perfect Customer look like for you?
Can I start that one? I think it's interesting because our current demographic is sort of the millennial group of people, between 1,000 and 2,000 sort of per month in terms of income, and I think a bit more than that sort of net income. That's typical today, and I don't see us moving away from that customer. What we want to do is extend the life with that customer. So as they progress through their stages of life, we will be there to offer them, using our AI, to say, okay, you wanted to save for something specific and discrete right now, and we've helped you do that. You didn't have to think about it. We've helped you put that money away. But as they progress through life, life becomes a bit more boring as you get older. You've got to pay more bills. You've got to, you know, cover things in the house, rainy day funds, and actually then start at some point thinking about, you know, families and things like that. So how do you get the better returns to make the most of the savings that we've helped you save? So I think the evolution from helping you save, but then the addition of actually what you've saved, we're going to get you the best returns in the market for that. And depending on your risk factors and your risk appetite, depending on how accessible you need that money to be, we will have solutions for those. So if it's fixed term deposits or it's long-term, you know, funds, risky funds, unrisky funds, we want to be able to give customers the ability to pick and choose. So much as our demographic currently is quite millennial based, I can see that opening up even further, so that we'll actually have a broader range of the mass market in there. So it will have solutions for everybody. At the moment, it's the younger end, but it will grow as they grow and our customer base grows.
Mm.
In addition, thank you, Sharon. Sorry. In addition to Sharon's comments re product, what's your view on international expansion? I know we've had a couple of questions from the audience about that. You know, does this product scale internationally?
Simple answer to that. The market opportunity is definitely global. If we look across Europe in particular, there's no one really dominating the space in this way. Revolut have demonstrated the possibility, the opportunity to do that, in particular with a company built out of London, and that's very much an aspiration for us. We want to democratize access to it. We want to be able to break down the borders, the boundaries, whether they're geographical, political, and so on. That said, we're currently, as I said, about 250,000 registered users. That is a relatively small number of the UK population. I think there's an opportunity for us to reach over 10 million customers in the UK in the first place. So the focus certainly for this year, and most probably for the first part of next year, is going to be the UK, and then beyond that we'll look to Europe.
To pick up on something you just said there about you know, a raft of amazing financial technology companies have been born in London and continue to remain in London and grow in London. I think it's fascinating that the proximity of the London tech scene to the London financial scene has has kind of molded together, and people aren't following the traditional path of top tier university into investment bank into retiring to the home counties.
And now everyone wants to join a fintech, isn't it?
And now everybody wants to join a fintech, for sure. And I think to that point, like, why do you think so many smart people are wanting to solve problems in financial technology companies like Chip, like Crowdcube, like Revolut that you mentioned, and many others? And what is specifically your attitude and approach to attracting and retaining talent? Because there's a lot of interesting, fast growth, well-funded businesses to go work at, right? If you're a AAA talent, what's special about Chip, and what's your approach to finding and nurturing?
I think what our approach, and the reason why I think so many people want to do that, want to join fintechs, is the same thing. It's the ability to influence, control, create outcomes that you see in customers' hands very quickly on relatively short spaces of time. Traditionally, if people worked within financial services or within big organizations, legal, commercial, whatever it might be, you tend to work on a very isolated piece of work that's quite separate to the bigger picture. And what you're seeing with companies and products like Chip is us empowering smart, driven, hardworking people to actually have ownership of things end to end, and see the impact, see what they're able to deliver, and see that in customers' hands. And it kind of comes back to that community piece as well, with the investor community and our Chipmunk community, that we're able to attract, as I said, highly driven, intelligent people to come and work in our company, work on something, put it out to the community, work with the community of customers to understand what it is that should be built, get that built and deliver it to them, all in a relatively short space of time. And that is, a fantastic working experience that just wasn't on offer, I think, before the explosion of tech companies and fintech in particular.
Just to add to that, I think in terms of answering your point about how do we attract the right talent, I think part of it is knowing who we're looking for in the first place. So Chip itself has a very strong sort of get stuck in, hands-on culture within the business. Everybody gets stuck in, doesn't matter who you are. And without swearing, it's a get bleep done type thing. And whenever we're recruiting for a role or getting candidates in, we expect them to actually sit and talk to quite a lot of people within the business, because it's really important that they feel that it's an environment they can thrive in, and likewise they can see what actually they would be doing hands-on to some extent. So it's really, it's more of a two-way interview actually, and sometimes it just doesn't feel right for people, which is absolutely fine, so that when people do land in our business, they land very, very well, and it's the kind of place that they can see what they do and what that results and outcome will lead to, because it is a competitive market out there at the moment, especially in this space. And for us, it's key is do culturally everybody align, and we put people through quite a lot of stages so that we are all comfortable, including the person who's joining, which I think is really, really important.
It's probably a good time for us to say, if you'd love to work at Chip, just drop your CV to careers@getchip.uk.
Yeah, please do. We are recruiting.
# always be hiring. There we go. You're hiring, or you're in the fortunate position to be hiring, because have just closed and are in the process of closing a very large round of funding in the middle of a global pandemic, which is no mean feat. Can you, Simon, talk to the audience about this funding round, perhaps a little bit about your funding history? I know you mentioned, the total amount of capital you'd raised to date. What's the composition of this round specifically? What are the terms of the convertible? Why a convertible? A bit about the future fund. I think that people would find that really, really useful.
A lot of questions wrapped up in that, Matt. So briefly, we've crowdfunded sort of over the last 3 years on several occasions. As we said before, community and our investor community is an absolutely core to the company, to the evolution of the product, to the growth of the company. And we've worked with you guys at Crowdcube, and it's been, you know, an integral part of our success, having so many of our customers be investors in the company. And yeah, it's been an amazing journey for us, and I think some of those investors that are right in at the earlier stages as well. As far as this round goes, this is by far the biggest round we've done. We are in the process at the moment of negotiating a much larger, a significant institutional investment round. I should just put a caveat on that it's not confirmed. But therefore, what we decided to do is launch a convertible round rather than pricing our equity at this point, whilst we're in negotiations with VCs, is to actually have a convertible round, giving our existing investors and the tens of thousands more of our customers who wanted to join our investor community to invest in the company in a convertible round. What this means very simply is you invest an amount of money now, you're not issued with shares at this point, and then when we close the follow-up funding round, the money that you invest now converts to shares, but it converts at a discount to what the follow-on investor is paying. And that discount is a minimum of 20%. So if we close the funding at an 80 million pound valuation or higher, the people investing in the convertible round are getting a discount of 20%. Sorry, 80 million pound or lower, it's 20%. If the valuation is anything higher than 80 million pounds, so for example, if the valuation was 160 million, your investment still converts at 80. So you're actually by effect getting a 50% discount on that follow-up round. As I said, the purpose of that really was to expand the investor community and to raise a bit more capital in the short term to kind of accelerate the growth opportunity that we've seen on the back of COVID and kind of got in front of us right now.
Can you talk a little bit about use of funds? You know, where this is a substantial amount of capital for a business at your stage of growth. Like, where are you going to deploy that over the next 6 to 12 months? And secondary to that is perhaps talk a little bit about your view on exit or creation of shareholder returns ultimately in the future. I know, you know, that's a little bit finger in the air, but I think it would be useful for the audience to kind of hear where your head's at in terms of potential exit for investors too.
Sure. Sharon, do you want to take the stuff about the spend on product and growth through product and so on?
Yeah, sure. If I take that first, now I'll hand back to Simon about the exit views. So at the moment, the key focus for the investment that we've received is to be able to do 2 or 3 things. Firstly, to enable access to investment funds. I think that's critical in terms of broadening our product breadth. We want to be able to manage our revenues on multiple layers. So we need to ensure that we've got not just good best market returns in deposit products or best returns on your savings amount. We want to be able to give risk factors as well to that. So access to investment funds. So the spend that we're going to need in terms of operationalizing that, the increase in manpower to get that live very quickly. That's an immediate focus. But also the piece we talked about earlier, making it really, really easy. So we want to make all of this seamless, and the ability to apply our AI to determine, okay, we've looked at what you've got, we've looked at what you're spending, but also we've looked at what you've got stashed here as well. This is what we're recommending. The ability to make that seamless and take it out of the customer's hands in terms of the decision process. We want to make investments in that space as well. So looking at broadening our product suite. So we've got ability to raise not just subscription fees, we've got assets under management fees as well. So it's a 2-pronged approach there in terms of product breadth, but then additionally to sort of really supercharge our AI and pipe work to make it even seamless. So it's, you know, when people say signing up to a new product might be 4 or 5 clicks, well, why shouldn't it be 1? You know, just accept, crack on. And I think they're the 2 areas that we're really going to focus our spend on.
Yeah, it's growth driven through product, right? That it's, you know, when we're looking at it and going, okay, how do we grow? How do we grow the business? How do we grow revenues? How do we grow profitability? That's not necessarily, you know, spending more on acquisition. That's investing more in our product, right? And in the value that we're creating for customers. And that in turn should attract more customers, should attract more assets onto the platform and drive more revenue and more profitability. On the exit point, I'm going to quote what a wise angel investor once said to me, which is, "Don't let the tail wag the dog." And I think what he meant on that, and it's a mantra I've always kind of kept, I've always just thought of over the last couple of years, is that our focus, and my focus certainly on a day-to-day, and the management team's focus, is to create value, create features for our customers. And if we focus on what our customers want, on how we create a better product for them, in turn, we attract more customers, we drive more revenue, we drive more profitability, which in turn creates more value for our shareholders. And when we have that shareholder value, the exit opportunities, the opportunity for people to take money off the table, for there to be a liquidity event, they will present themselves. And it's not something, you know, frankly, it's probably not a very good answer to give people who are looking for a return on their investment, but exiting the business or how we do that is not something that I think about at all. It's not something that I focus on at all. I focus on the product and creating value for the customers.
Answer. And yeah, but you know, on a personal level, I agree 100% with your tail wagging the dog analogy. Let's talk a little bit about the shareholders, like the many thousands of them that you currently have. What value do you put on them within the business? You talked about the product feedback loop. Like, why does that set you apart from your competitive set, or even the incumbents in the markets you currently operate in or are planning to move into? Like, how valuable is it to have get that level of engagement?
It's everything. It's the fact that this community they're the people using the product. They're the shareholders in the business. They are the product, if you will, the product feedback loop in itself. They're the people that hold us to account on everything. And sometimes, you know, it causes a lot of, let's say, tension sometimes inside Chip. But we have this investor community, you know, very much in it with us on a day-to-day basis, and it's absolutely integral to everything we do. And frankly, you know, Crowdcube have been a big part of that. And when I talk to other companies or other companies in fintech or in tech in general, and they talk to me about crowdfunding, you know, and I try and get across that point that it's not just about the capital you raise, it's that level of engagement of care that you get from the people investing in the business. And to have, as we said, I think with this round now, 15,000 investors is a pretty amazing feat. I think it might make us, after Monzo, the largest investor community, but I'll let compliance confirm that afterwards. But at the close of this round, no comment until that's
until
the final numbers there. We don't know, but it's I think Monzo have over 20,000, but we'd gladly take a close second.
Almost enhanced corporate governance as a result of having this huge community of user shareholders.
And it's accountability from everybody. It's accountability from customers who you know, have used the product for 3 or 4 years. They're not necessarily the most affluent customer. They're not necessarily the most valuable customer. They might have invested as little as £50 in the company, but oh boy, do they hold us to account. And at the other end, you know, customers who perhaps deposit much larger amounts, have a different agenda, want to see the company or the product grow in a different way, and they're also, you know, incredibly engaged. And it's amazing to see all these different tentacles of our investor community interacting with each other.
about helping you become a better corporate citizen. You know, we hope that more and more businesses, and they do appear to, will be embracing that. You know, I do believe you are a better corporate citizen if you can be held to account by tens of thousands of user shareholders. So I think that's wonderful.
And the other point, actually, Matt, I forgot to mention before, is that on a very practical level, we've seen if somebody is an investor in the company, they're 4 times more likely to refer someone. And to date, 60% of our growth has been driven from organic, from user referrals, and that to have that sort of increased level of advocacy, evangelism from people is very valuable as well, just on a practical level, right? You know, you often find when we're sort of round the table with someone, or down the pub, or at a sports game, whatever it is, and it's, look at this company that I'm an investor in, you should check out this product. And it's like we've got this army of people out there referring, advocating, evangelizing for the product.
In a party test at Crowdcube. So when we look at a brand, it's, would I feel compelled to tell the person sitting next to me at dinner or having a drink that I'd invested or I was a shareholder in this product or service? And you guys, you know, do that with bells on. It's really, really great. A couple of the questions we've had from the audience, which I think are relevant and worth diving a bit deeper on, is the product in a downturn, the product in a low interest rate environment, the product in a recession. You know, what's keeping you awake at night as founder and CEO? You know, talk to the audience about, you know, how the product behaves and how you expect users to behave in what might be a difficult macroeconomic environment for the next 12, 18 months or even longer.
Sure. I mean, I'm not going to lie to you. In early March, I was highly concerned. You know, for a company like this in high growth mode, we are, you know, we're always dependent on our growth trajectory, on raising more capital, and kind of entering into this macroeconomic situation that we found ourselves in was very much a concern. But the reality of what we've seen is, I think the product is very well placed to ride the wave. That's what I meant, of a downturn, because as people spend less, they're able to save more. And there are, you know, we've seen, I think, pressure on other fintechs that are more focused on spending. When people have been using the cards less, obviously their revenues have declined. Banks that were relying on the Bank of England interest rate on the deposits they held, obviously their revenues declined. Other companies that are focused on travel, again, you know, we've seen their revenues declined as the travel sector has seen far less activity. What we've seen is, as a result of that, a shift of those funds more into savings. I think the challenge for us as we launch ChipX and our investment funds products is to nudge our customers or show our customers that they can and they should move some or part of those funds into capital at risk, into investment funds that will enable them to earn at very least an inflation beating return. Because I think it's no surprise to any of us that leaving your money in cash these days doesn't get you very far. So that's the, I wouldn't necessarily say the thing that keeps me up at night, but I think the challenge for us is to do what we've done with saving, with automatic saving, intelligent saving, to be able to do that now with investment funds, and with getting customers to understand the risk profile of these things and appreciate that they can, all things considered, should be able to earn an inflation beaten return by having their money deposited not just in cash deposits. So that's kind of the big picture challenge for us.
I'm talking regularly to companies and founders, and there's this almost hide behind the sofa when founders say, look, we kind of won out of COVID and won out of this situation because, you know, customer behavior has changed in a certain way, or consumer spending has adapted or evolved in a certain way. And I don't think we should necessarily be ashamed of that as businesses. You know, Crowdcube has grown during this period, and whilst it's been tragic for so many people and for the wide economy, you know, technology businesses have a way to adapt and evolve. And it's great to see businesses thriving actually as a result of what's happened and continues to happen. You mentioned ChipX and the investment funds, which are on the product roadmap.
Yeah. Can
you kind of, as best you can, spell out what the product roadmap looks like? Is there anything else you can reveal?
But in simple terms, ChipX is our premium account. It's going to enable customers to access a much broader range of deposits. The vision for the product longer term, as I said, is to enable people to save as much as they can out of their day-to-day spending, or take it away from their day-to-day spending, also from their income, also from perhaps money that they have elsewhere that they can bring into Chip, eventually from their contribution from workplace pension, perhaps from private pension as well, and give our customers the full set of tools to bring onto the platform all of their non-spending money, right? All their non-day-to-day spending finances. And then on the other side, give them, we discussed this last week, and I think the phrase we came up with was obscenely easy access to the full range of deposit types. If I want to have my money in easy access cash because I'm going to use it next week, I should be able to, at the click of literally one button, I should be able to move that across into the market leading rate. If I want to save up for a new home and I want that in a lifetime ISA, again, with one click, I should be able to very easily move that across. I should be able to allocate money coming in from my account next month accordingly. If I'm looking for longer term savings and investments, I should be able to allocate that just as easily. Pension, retirement, it should all just be obscenely easy, and as slick and as I guess to some extent fun or exciting to work with as it is to order a Deliveroo or an Uber or other companies like that, where we're so used to this sort of magical user experience. But yeah, in financial services, I think we've got a long way to go. So that's kind of the roadmap, the opportunity. Sorry.
Yeah, I just wanted to add a little bit more on the roadmap in terms of Simon's talked about the feature side of it, but also the banking relationships that we are building. So with ChipX and the investor side of things, we're also going to be introducing a lot more banking products, so they're the more deposit-based products as well. So you might want to use your pot to apply to a better interest rate, and we've got access to market-leading rates across multiple banks. So the near term, as well as the investment side, is also bringing more and more of the different banking relationships we have to life through the app as well. So it's slick and it's easy, but depending on how much access you want and quick speed to your money, you might choose to put it away for a year. That's fine. We're going to be having different products available through the platform that we've got.
Yeah, we've got to make access to all of that. We've got to make access to all of that as easy as it is to order a takeaway. That's the vision. That's the mission.
Simon, Sharon, same question that I asked to Simon for you. What's keeping you awake at night? Like, how has the business and the wider team adapted to full remote working? What's been the impact on the business, if any, of COVID since March? And how are you planning for that going forward for things like hiring and retention and that sort of stuff?
Yeah, so it's interesting. So pre-lockdown, we already had a flexible working approach. So we never really all were in the office at any one time anyway. But sort of things getting a little bit sticky in March time, we'd already introduced, let's test every single one of our platforms. We're not in the office. We can't access anything. Can this business operate completely remotely? So we'd fully tested and done that several times before any lockdown happened. I think it's fair to say there are challenges. We all have had to experience adjusting to working at home on your own. I think we're all social animals at Chip and like to be with one another. So I think we, for our own mental state, do wish we could be together more. We've all had the fun moments, me particularly, when my two boys walk in the middle of a conference call with a bank, and you're like, no, you can't have a snack. Just eat what you can from the cupboard. But I think that's just the reality we all live in today. And, thankfully it's happened in political situations, in much more public situations as well. I think for us, as a team, we're a very close team, and yes, there's the downside of not having that face-to-face contact like we wish we could, but we do an awful lot with the teams. When anyone new comes in, we have virtual lunches that we do with them, so they feel part of the team. And we've got together in smaller groups where we can. Recruitment, again, we've talked about already. We even though we can't physically be next to one another, we make sure people meet as many of the team as possible. In terms of resilience, though, I think just slightly changing the tack of the answer. When we look at the business from my side of things, I look at the numbers every day and all day to make sure we're sustaining the business. So are we attracting the right talent and have the right capacity in the business to deliver our roadmap? But then also, are we generating the revenues in multiple ways so that we can sustain this business long term? Because ultimately, from an investment perspective, that's what you want, a business that's going to grow and make profits, sustainable profits longer term, to be the best investment choice for you. So it's not just thinking about one fee on one thing. It's how do we have assets under management fees, subscription fees, transactional fees, so those revenues can come from multiple places whilst driving customer value long term with a team that can operate totally independently in a digital space. That combination is generally what keeps me awake at night, trying to, manage that puzzle day to day. But, the realities of working remotely, I think we've all experienced, and it's the new way, isn't it?
Yes, yeah, and I empathise with children coming in and looking for snacks
Yes.
at the wrong moment. Here's keys to the kitchen, go sort yourselves out.
Exactly.
It clearly hasn't hampered you guys, because you've acquired the customers aggressively during lockdown whilst being fully remote. So kudos for executing on that. I think as we move into closing remarks, I guess, Simon, I think why this is your platform's now yours for kind of why invest now, why Chip, why back you to create meaningful shareholder value and build a business which is important, which has a place within the financial services landscape, both in the UK and internationally, and as you said, is a good corporate citizen.
I think, as in the context of fintech challenges, savings and investments represent the biggest market opportunity, the biggest profit opportunity compared to any of the other companies that we've seen in the space. Yet for reasons that I won't go into now, it hasn't been aggressively tackled yet until now. And we've got companies like ourselves, like Moneybox that we mentioned before, that are going after this space. I see somebody mentioned in the questions, and it does feel very much like a land grab, and that is right. So
I think I've just actually checked your pitch stats for today. You've got 17,000 people following this campaign live at the moment. 2,500 people have looked at it this morning already. 100,000 pounds invested today already, and I think it closes in 2 days. Is that right?
Yeah, so we're closing 12 o'clock on Friday, and help us build something really, really special.
On that note, we are going to wrap. Simon, thank you very much for your time. Sharon, thank you very much for your time.
Thank you.
You are a very valued client of ours. We love what you do. We love the way you conduct yourselves and the type of business you're building. And also thank you to everybody on the call for engaging with and continue to have interest in investment opportunities that we have the pleasure of bringing you to the platform. Thank you very much, everybody. Have a good rest of the day.
Thank you. And
Thanks so much.
Thank you, Matt, for your time for doing it.